Alright guys, welcome back to my YouTube channel. So glad to have you guys back. So today this is going to be a breakdown on NZD JPY trade actually took, and I want to also encourage you to subscribe, like and share, turn on the notification button if you haven't done that. So YouTube can actually recommend my video to other persons who are interested in learning Forex trading or who are interested in my channel. So I'll be glad if you can like my video and also subscribe. That would be a great support. Thank you. Alright, so this is going to be a breakdown on any JPY I actually took, and I actually made about $4,000 on this what we got here. Alright, so on my MT5 account on my desktop, you can see ongoing running trade of $3,000, $9,000. So it's actually retreating at the moment. So I'll be closing this trade down for the safety of this account. So I'll just have to close this trade now. Alright, let me just close this trade. Alright, before I close this trade, you can actually see here, I actually took the trade from this position here. Though my entry was above this fair value gap, but I actually came late. When I got the alert, when the price got here, I actually saw the trade late, but I had to enter, and my stop loss was still at the exact point I wanted my stop loss to be. So at the point of this trade going down, I look for more entry, and I actually short the position. You can see there's that short at this candle, and my stop loss was above this candle. So once the trade got down a bit, my stop loss were all at break even, right? So I'm going to close this set of all, right? And all right, so let's check trade history so far. So for trade history, we got $7,000 in profit on this account. All right, so total profit is $7,000. Last week I actually made $4,000, and I'm closing this week also with $4,000 on this trade, and my equity is $8,000. So guys, so this is it for this account. So let me give you guys a breakdown of this account and how I actually made this money trading this account. Alright, so this is a strategy real quick. This is a strategy real quick. So the algo market structure strategy is actually what I actually applied here. So algo market, algo market structure. Alright, so this is actually a breakdown on how I actually took this trade. So for the basic market structure, the basic market structure tells us that when we have a higher low and a higher high after the break, here the higher low and the higher high, right, is our same structure. We have our focus on this zone from this high to this low after this break in an uptrend, right? So we have this zone as a zone where we focus on. So the basic market structure tells us that when you have a break, you're seeing low to your seeing high, you expect price to come back, right, to your order block, right, or fair value gap and continue the move upward, right? So same thing applies to the downtrend. When you have lower high and lower low, the market is in a downtrend. And after the break, our daily market structure tells us that we have a swing high and a swing low, right? And what you expect is that the market should go back, right, to the point of interest, right, and start going down. So this is what the daily market structure tells us, right? So we go to the algo market structure. The algo market structure is telling us, right, that okay, before the algo market structure, let me explain what liquidity actually means, right? So if you don't have liquidity within this your higher high and higher low, what you expect the market to do is that the market takes this higher low, sorry, this lower high to be a liquidity zone. So this is what the basic market structure tells us that we should expect this, but in real life, the market is going to take you out, right, before going to your direction, right? So in real life, this is what you expect the market should take you out, right, before going to your direction. So our market structure is telling us that if you are considering this high to this low, there are things you have to look out for, right? And that simply means we have to spot out our liquidity first before the break, right? We have this swing low to our swing high after the break, but to validate this zone, in order for price not to actually take it out, right? In order for price not to take it out, we have to spot liquidity first, And this is what we have as our type 2 algo market structure, right? We have this as our liquidity before the break, right, to the upside. So after the break of structure, your higher low and your higher high, we have our liquidity and we have our swing low to our swing high. So this swing low and our swing high is being protected because we have our liquidity. So what you expect price to do, price should come back, right, from your higher high, which is a swing structure, takes out the liquidity, right? Then tap into your POI, either your fair value gap or your how do they call it, order block, right? And you have something like this. So this is basically what your algo market structure is telling you. Spot and liquidity before the break, right? And for the downtrend, this is actually an uptrend. So for the downtrend, we have a higher low to our lower low, our lower high to our lower low. After the break, you want to see a liquidity zone before your swing high to your swing low. Else, if there's no liquidity, price is going to take you out, right? Price is going to take you out before going to your direction. So you want to see liquidity first, right? So what you expect to happen when you got this, you expect this to happen. First takes out the liquidity, right? Then moves to your direction. So this is actually the concept I used in taking this trade. Now let's go back to our setup right now and let me show you how this works. As simple as it is very effective, right? As simple as it is very effective. Alright, so this is very simple. This is very simple. So what do we have here, right? We have a break to the downside, right? Break of structure. Let me label it. We have our break of structure. Here is break of structure. And after our break of structure, what do we have? We have our swing high to our swing low, right? So here becomes our swing high and here becomes our swing low. So let me just mark it out. So here becomes our swing low, actually. Alright, so here becomes our swing low and here becomes our swing high, right? So here becomes our swing high, alright. So I'm going to mark here as our swing high. Alright, so we have our swing low, right, to our swing high, our swing low to our swing high, right? And here is actually our liquidity. Let me put it down. Here's actually our liquidity zone. So you expect price to actually take this out, just as I explained on the phone now. You expect this zone to be taken out, right? So some persons after this break, they'll say, okay, now we have a break. They want to start selling from here. No, here is our liquidity, and you can see a fair value gap before POI. What I actually marked out, I actually marked out the last bearish candle, right, before this breakdown. So we have a sweep up and we have a change of character. So this is actually a break of structure and a change of character, right? So you should look for an entry within this point. So this is actually market structure change to the downside. So before this zone will be taken out, it has to come back to this zone. But for it to be valid, you have to spot out our liquidity first. So let me show you what I actually marked out. Right, so I actually marked out this zone, the last bearish candle. You can actually take this for the last bearish candle, right? But I actually marked this as our last bearish candle, right? I wait for price to come back to that zone. So what price did is that price came back to that zone and start selling. So this was how I was able to maximize trade. I actually started this trade less than $200. That was $150. And I was updating my WhatsApp status the community actually. And this is actually what we got, right? So this is actually a very simple and easy trade breakdown you can actually follow, right? And what if you want to know if that zone of liquidity is valid, you want to know if the zone of liquidity is valid, this is what you have to watch out for, right? You have to watch out for liquidity zone. The liquidity zone must be above your premium and your premium or 50% level, right? It should be at your premium level. Now, this is what I mean. You take your Fibonacci tool, right? You mark it from the swing high to the break, where you got the break, right? So this is actually where we got the break. And where is your liquidity? The liquidity is above 50% level. If your liquidity was here, this should be an invalid liquidity zone. If it's below your 50% level for itself, it's actually invalid liquidity zone. Alright, so let me just customize this, right? Let me customize this, or let me just leave it. Let me just leave it. So you can see our 50% level. So above 50% level is your liquidity zone. So for it to be valid, right? For eventually price must have did something like this, right? Came down, didn't get to 50% level and fall down, right? This will not be valid because from your swing high to the break, it is below 50% level. You understand what I'm saying now? So as far as it is above 50% level, then the liquidity zone is valid. If you want to do a valid liquidity zone, you mark out from your swing high to your low. If it's above your 50% level, then it is a valid liquidity zone. All right. So basically, this was how I was able to actually make some money off the market.